Welcome back. You're watching The Money Show, and it's time to answer your portfolio queries. And just before we do that, let's just flash our WhatsApp number that's on the screen. You can also send your questions on our email ID. Just send us current investment details, and we will help you align all of those investments and investment strategies with all your financial goals. Samisha is the guest on the show who will be helping you with your financial portfolio and will be doing your life financial planning. Samir, hi. Welcome to the show. A lot of questions coming in on our WhatsApp and email ID specifically to be answered by you. And the first one over here is Mr. Sumant Das, who says that he's got SBI large and mid cap investing almost 5,000 rupees via SIP, SBI Contra, and Kotak multi-cap 5,000 each, Tata mid-cap 1,200, Tata small-cap 2,000, ICICI multi-asset 3,000 rupees SIP going on. He needs 10 lakhs in 5 years, 1.5 CR in 15 years. And he also says his current portfolio is almost 3,70,000. And what should be his strategy? And he doesn't want to change too much. All right, Mr. Sumanta, you've got that clarity, which is good. You don't want to change much. But then let's just see if you are very well diversified, although you've got good funds in terms of AMCs and the scheme choices over there. But let's just help you strategize this better. Samir, what's the first sense that you're getting from his portfolio?
Good evening, Kavita ji. Looking at Sumanta ji's portfolio, what we feel is the portfolio mix is really good. Say SBI large and mid cap and Tata mid cap, mid and small cap. It is a very good mix, overall diversified portfolio. Even along with that, Sumanta ji has multi cap as well as multi asset. So portfolio is very well diversified. There is no from our side. At this juncture, there is no need to make any changes in his portfolio. Now, we will discuss about the goal which he has set for himself. Say in next 5 years, he wants 10 lakh from this portfolio. So, and the current portfolio amount is 3,70,000. So, if we assume that if his current portfolio generates around 12% average CAGR return, in that situation, this 3.7 lakh will become around 6.5 lakhs. And balance 3.5 lakh he can withdraw from the current SIP amount. But for the long term, for 15 years, he has said he wants to accumulate around 1.5 CR. For this amount, the amount is little SIP amount is little short. Now he can do two things. Either he can, if he is in position to increase his SIP right away, then he has to increase and take it to 32,500. The present SIP amount is 21,200. So from there too, he has to increase, he has to take this SIP amount to 32,500. And if he's not, if he's not willing to increase SIP amount immediately, in that situation, what he can do is every year, if he can step up his SIP by 10%, in both situations, he'll be able to achieve his goal of 1.5 CR in next 15 years.
All right. So here are two strategies that we're talking about and the same portfolio, same investment. See, in 5 years, 10 lakh rupees. Now, I just want to understand, considering it's just 5 years, Samir, and he's got a very equity-oriented portfolio for 5 years. And he cannot be stay invested, for all 5 years in equity, if that is the first goal that he has on mind. Definitely for the 15 years goal, he needs to increase the investment amount. But then, as far as the 5-year goal is concerned, he needs to start withdrawing money from equity also. How should that be strategized?
So, Sumanta ji, as soon as from 4 years down the line, you have to start switching the 3.7 lakh lump sum from equity to either you can take it to passively managed index fund or to a conservative hybrid fund. So by doing this, in last year, in case if any, because of any event, if volatility will be there, it won't have any much of the impact on your goal side. So our recommendation is always that, as soon as you are reaching near to your goal, your equity exposure should come down, and gradually you have to take exposure, a larger exposure into passively managed fund or hybrid, conservative hybrid fund. These are the good way to pacify, to counter the volatility in the market.
I mean, starting from now, in next 3 years, he should start that after 3 years?
Yes, after 3 years, he should gradually go away, to protect against market volatility. He has to gradually move from equity, direct aggressive equity fund to say like small cap, mid cap. Those are the highly volatile in a particular when market is volatile. This two fund have a larger impact. To avoid or to protect himself in that situation, he has to move away gradually from this fund to passively managed fund
So
or
I
the
so
conservative fund.
since it's the same investment bucket, even for the 15 years goal, won't this hinder or interfere with his 15 years time horizon goal?
See here, Kavitaji, we are not asking him to completely redeem, because his current SIP amount, his current SIP will be there, right? So gradually every month he'll be some amount is definitely going to invest in this kind of funds, right? The fund which he has selected, and this fund as of now, these funds are looking really good. But as we always recommend that investor has to regularly monitor his portfolio on a regular interval, maybe down twice a year. That is the good strategy. If in case if any fund is continuously not performing, or due to any management changes or any reason, if fund has a subdued return, in that situation he has to switch from that fund to another in that category. Suppose if we talk about small cap, instead of Tata, there are possibility he has to move from Tata, and he has to pick another fund in the same category. So that churn will definitely be there. But if we talk about 5 years from now, this is a shorter horizon when it comes to invest in equity. As he has already started investing, he has accumulated some portfolio. So our advice would be stay, continue invest for stay invested for another 3 years. And once he's complete the 3 years, he has to gradually move from active to passive or conservative hybrid fund.
All right, let's move on and let's take other question. This is from Akshay Chajed, and he's currently investing 1,50,000 as an SIP in a couple of funds. So the funds are UTI Nifty Next 50 Index. He's investing 22,500 over here. DSP Nifty 50 Equal Weight Index, 15,000 SIP going on. Contra Fund of Kotak, 18,750. Kotak Flexi Cap, 18,750. HDFC Mid Cap and Motilal Oswal Mid Cap, 22,500 each, and Nippon India Small Cap, Bank of India Small Cap, 15,000 each. So he wants to understand whether having 2 mid caps and 2 small caps is it a good strategy, and how can he also be very well diversified across large cap, mid cap, and small cap. He wants to understand whether any rebalancing is needed in his portfolio. So, Akshay, congratulations. I think you figured out what the problem is. You've got 2 mid-cap funds, and actually both of these funds are good. Again, the choice in small cap is good. I mean, Nippon India small cap definitely is preferred. But, what happens is, in fact, I think he's over-diversified maybe in the large cap category. But, Samir, what will be your recommendation? Yes, this is a case of over-diversification across market caps, but where can he exit?
So, Kavitaji, when we look at the portfolio of Akshayji, what we feel is large cap exposure. He has invested in both the passive funds, say UTI Nifty Index Fund as well as DSP Nifty 50 Equal Weight Index Fund. Both are passively managed fund. Ideally, when we recommend a person should have around 40% of the 40 to 50% of the exposure in a large cap category. So when we talk about 40 to 50%, one fund is enough. He has invested in 2 fund. Apart from that, FlexiCap is also there, Contra is also there. All funds have some bit of exposure in large cap category. So here the exposure in the large cap is little high. Obviously, it is little high, but over a period of time, when AUM will grow,